Hello, welcome to the European Open briefing for Tuesday, November the 1st. I'm BoJ, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So we've got quite a bit of news this morning. We had two central bank meetings, and we also had some PMI data, mainly out of China, which were on the positive side, as the manufacturing PMI, the official PMI, rose the highest in 2 years in China, and this gave quite a bit of a boost to market sentiment in Asian trading today. And European markets are also expected to open positively today, specifically European equity markets. Other movements, we saw the Australian dollar rose sharply after the Reserve Bank of Australia held interest rates unchanged. Although this was expected, the RBA gave a fairly upbeat assessment of the Australian economy, so this dampened expectations of further rate cuts in Australia. We also had the Bank of Japan policy meeting today. The Bank of Japan didn't announce any changes to its policy, although they did push back the date of when they expect to hit their inflation target. And the dollar this morning is fairly steady, around 105 yen. And of course, we've got the start of the Fed's two-day policy meeting today, and we're going to get their policy announcement tomorrow. So let's begin with the Chinese data. We can see here that we had both the Caixin, the private survey, and the official NBS PMI survey. The NBS manufacturing PMI rose sharply from 50.4 in September to 51.2 in October. This was well above expectations of 50.4, and the Caixin manufacturing PMI also was strong. It rose to 51.2 also from expectations of 50.2. It was also good news for the non-manufacturing PMI. So this shows that outside of the manufacturing sector, growth is also accelerating. Within the manufacturing sector, it was mostly down to the construction sector that we saw this big boost in activity in October, and also we're seeing higher commodity prices for items such as coal and steel, which are a large component of China's manufacturing sector. In terms of the China's currency, the yuan, it was slightly weaker today at around 6.7755 despite the strong data, but that's mainly down to the stronger dollar. So the Chinese data did boost the Australian currency. The Aussie is seen as a liquid proxy for China's economy. This is mainly due to the fact that Australia exports a lot of commodities to China, but also lending support to the Aussie this morning was the RBA announcement that they held rates at 1.5%. In its statement, the RBA said that the economy is expected to grow at close to its potential rate, and this basically pared back expectations that the RBA would be cutting interest rates anytime soon, and we saw that big jump in the Aussie. It's currently around 0.7664 versus the US dollar. And talking about the US dollar, we can see the dollar. We saw that rebound yesterday when it had fallen sharply on Friday after the FBI reopened its investigations into Hillary Clinton's emails, and it fell back late yesterday, but it's since recovered back to around the 105 yen level. We had some fairly positive data out of the US in terms of the personal consumption expenditure. Both personal income and spending rose at fairly robust rates. And today we have the ISM manufacturing PMI. That's going to be another important data ahead of the Fed's policy meeting this month. The Fed begins its two-day meeting later in the day, and they will announce their decision tomorrow. Although markets aren't expecting any new action this month, given that it's just a week before the US elections next Tuesday, but the FOMC statement will be closely watched, as it could hold vital clues as to whether or not they're on track to raising rates in December, and this is likely to affect how the dollar behaves over the coming days. Now moving on to the Bank of Japan, because they also had their policy meeting this morning. They didn't announce any new changes. Last month, they did, of course, announce quite a big shift in policy. Instead of targeting a fixed monetary base, they're going to target long-term yield curve. They also kept interest rates unchanged at minus 0.1%. There wasn't anything too much new out of the Bank of Japan. The governor, Haruhiko Kuroda, held a press conference, although he didn't really say anything new to what he's already been saying in recent weeks. The main news out of the Bank of Japan was the fact that they shifted back when they expect to hit their 2% inflation target from the fiscal year 2018, which is end of March 2017, to the fiscal to the end of March 2019. So this wasn't much of a surprise, because we know that the Bank of Japan is struggling to raise inflation from currently at minus 0.5%. I guess another notable thing out of the Bank of Japan statement was that they expect the risk to the economy to be on the downside, and this kind of suggests that the Bank of Japan remains on an easing bias, although for the time being there's no indication that they're about to ease policy. So potentially they're unlikely to act unless there's any big economic shocks that would threaten the current outlook, where they're expecting economic growth in Japan to stay on a moderate path. Now, lastly, let's have a quick look at the pound. The pound did receive a bit of a boost from reports that the Bank of England Governor Mark Carney has decided to stay in his post until 2019. Now, when the Mark Carney was first appointed, he said that he expects to serve just 5 years instead of his full term until 2021. The UK government did want Carney to serve his full term because given the recent developments from Brexit, they wanted him to stay on and to steer the UK economy through this uncertain period. So Mark Carney instead has settled to serve just a year extra until 2019. Although having said that, there was at the same time there was some criticism for Mark Carney for the Bank of England producing overly pessimistic forecasts of what would be the potential impact on the UK economy from Brexit. Bank of England has had to revise up its forecasts as the impact has so far been fairly muted. So there were some calls for him to leave even sooner than 2018, but it looks like he's going to be staying on until 2019, and that's boosted the pound. It is back about $1.22 this morning. Let's have a quick look at today's calendar. Coming up later in the day, we've got the manufacturing PMI out of the UK. That's expected to ease slightly from 55.4 to 54.5 in October. Later in the US session, we've got the ISM manufacturing PMI, as well as some construction spending data. That's it from me. Thank you very much for watching, and have a great day.